All right, and we are officially live here. But yeah, guys, welcome into Sunday, June 15th, 2025. Here are Yes or Yes Academy Inner Circle session. And let's see, it's Father's Day, as we mentioned. Let's see what the charts go this week, right? Last week we talked a lot about structure, right? We talked about structure, how the market likes to move, and the more I'm doing this, the more I'm teaching this, the more I see this market move. Obviously it's not becoming predictable, but it's just more so. It is following, you know, a lot of stuff that we teach. And again, though, a lot of times it's just about, you know, we can be in the right direction and still not participate in the trade, still not lose, and still not win a trade or even lose a trade. But again, though, right, the more we practice those simple movements, everything else would start to flow pretty good. Um, and as we always keep mentioning, right? I for the most part just focus on three movements. Okay. It's just either one big impulse, all right, a structured impulse, right, and or a single candlestick impulse. Okay. That's literally all I focus on, those three things. Anything else is valid, but I focus on those things, either an impulse low to high, a structured move low to high, or a candlestick low to high. Okay. And these are basically telling me the trend or the direction that the market wants to go. This could be a 1 hour candle, this could be a daily candle, this could be a weekly candle, and the same thing with the structure. It can be, whatever time frame, right? One of the things that we say a lot is like, where is price gonna go? Where is price gonna go? Where is it at now? And how do we get in to enter? Okay. That's something we try to kind of say in Spanish. It actually rhymed in Spanish. But yeah, so where is price going? Where are we now? And how do we get in, right? Yeah, and where basically we get in. And that's kind of where the fib comes in, the Fibonacci retracement tool, right? I think as I mentioned to you guys, right? This candlestick right here is bullish. So there's a high probability that the next candlestick will also be bullish. So this is the 1 hour candle, okay? And then we measure that 1 hour candlestick with the fib, okay? Like that. The next candle will literally open where the previous one closed, right? So if this is the open of price, just simple basic anatomy of a candlestick, but obviously the basics are very important. If we treat them that way, come on, okay, goes, yeah. So if price opened here, right, and closed up there, the next day or the next candle, the next hour, a lot of times, right, it will open where it closed, right? And a lot of times, right, two things can happen. Well, one, what we want to happen is that what we specifically want to happen all the time is, one second here, trying to get my chart centered. Come on. What we want to happen is that the next candlestick, obviously will open in the same area that it closed, and we wanted it to come down, let's just say to about 50%, right? But as it's coming down, right, it's not blue, right? As it's coming down, it's a red candle. Making sense? And it can go lower, okay? But the moment it starts going back up, right, that's where that wick starts to show itself. Basically, a wick is a shadow, is where price has been during that period of time, right? Where price has been during that period of time, and then from there, if it stays below its own open, right? If it stays below its own open, it will remain red. But the moment it goes above its own open, this little thing trails along. Okay, the moment it goes above its own open, it starts turning into a bullish candle. Okay, and then from there it can go up. A lot of times it goes in and touches the extension, and then from there it ends up closing, like so. Okay, and that's literally what I try to focus on different scales, right? Either these three things, right? These two things simultaneously. I'm always kind of keeping an eye on that, right? And then obviously these are take profit. The retracements is um, our entry zones, and the extensions is our take profit zones. Sí, Pablo, todos tomando lente. Yeah, this guy's right here. The fib is really, it's not that hard here. These numbers that you see here, and they can be in any order. They'll know where to land over here. So you don't have to have this exactly like mine. All you gotta do is just copy those numbers, and they'll plot themselves by themselves in the correct order. So si quieres tú solamente, Pablo, copiar este aquí. Okay, there's a chart. So that's the ideal scenario. This is the ideal scenario for us to look for. Now, there's sometimes this happens. Okay, sometimes this happens here where simply the buyers are so strong that we don't even get a wick, maybe a little wick here, and just sometimes it shoots up all the way up, all the way up, all the way up first. Okay, and then it hits the take profit area. Okay, and then a lot of times, price comes back down and then stays bullish and does something like that. Okay. So what happens with that situation happens? Well, on a lower time frame, okay, let's just say this is a 4-hour candle or a 1-hour candle. If price goes up first and it hits the take profit area, maybe that day during New York we actually sell instead of buy, right? We may actually sell instead of buy. And then we keep going and we keep going. We keep going to the next, the next direction. A lot, and then here, whenever we have this type of candlestick, a lot of times, right? That's it, open, yeah, open, close, yeah, and the new one here. Okay. What happens if price does this, and it comes back and we hit the wick down here, and then we go back up, to the open, and then it does that, and then eventually it closes. Okay, eventually it closes up there. Um, all that happened, right? Price is always trying to find some form of equilibrium, right? Some, the price expands, retraces, and so forth. Because this candlestick here did not balance out the 23%. Okay, at least the 23%, it didn't balance out. The next candlesticks with maybe another candlesticks, they'll come back and finally rebalance it and then take off. Okay, and then take off. For me, yeah, yeah. So this could also be a form of rally-based rally, as that's your Dr. Dries, that is as well. And on that note, okay, on that note right here, that's why the candlesticks here. Let's kind of do another example. Let's say we have the same scenario, but then this time, instead of this candlestick, actually, it did go down to 38%, bounced up, went back up just a little bit, but it never made the high. on this candle and just kind of ended up closing like this, right? That's where we have the drop base, well, not the drop base, drop base, first little base candle that's, just kind of just hanging in there. So like that, like that. Okay, something like that. So a rally have a push up and a push down. So technically, this pattern right here, guys, is nothing more on candlestick. So if I were to redo this structure here, this blue candlestick is the impulse, right? And then the red candlestick is basically that movement right here. Everybody got that? Let me just try it a little better. Like that. So if this were like in structure, if this was in structure, it would have been just that. And this is what we know in what is a bullish flag, right? A bullish flag scenario. It's also this is an impulse, right? And then this is a correction. So in two candlesticks by themselves, that's an impulse and that's a correction. Okay. And that's how everything's connected. Right? That's how everything's connected for us. All we have to do now is just simply understand how things are in a bigger time frame, where we at a fib level. Does it need to balance out a little bit more, or is it ready to take off? But technically, these are all the same movements, for the candlesticks, right? And then let's kind of complete the pattern here. Now, one thing that I've been noticing a lot, though, right, is that we do have to pay attention to the control candlestick, right? Not every candlestick can be measured, or fibbed. It has to be a control candle, one that's kind of leading the way, and then keep the fib on that candle until we make a higher high, and we have another control candlestick that we can rely on. Okay, that we can rely on. All right, yo. All right, let me share this image with y'all real quick. Actually, so no, Nico. I mean, it's more about, see, I think this is what Tommy and I were talking about last time. The question is, I never really matched the various patterns, flags, etc., and I don't use them. Should I? Pattern recognition in trading, I think it's important just to kind of like get our eyes set to a naked chart without indicators. But again, though, right, is um, let me show you guys this here, that I'm trying to find a way to simplify, a way to read the market as simple as possible. One second here. Where's it at? Here it is. All right, so check this out right here, guys. This is something that I'm working on to kind of really just make trading easy and simple as 1, 2, 3, right? Technical analysis. This is just still a sketch that I'm trying to put together. But again, technical analysis. What the chart is communicating with us. Do we buy or do we sell? So right. So if we see a rally-based rally, what is what does that price pattern communicate to us? Buy or sell? A buy, right? Bullish. Okay, so you see the pattern. So how do you enter? What's the strategy to enter? So you use the technical analysis to find your entry, your stop loss, or take profit. Okay. Again, these are just notes, right? Or the TA provides the points for entry, stop loss, and TP, etc. So we know that we enter at the base. Well, first of all, pattern identified, right? Boom. We're looking for buys. Now, strategy. How do we mark up the chart? How do we prepare for it? And so forth. Okay. Well, this is our entry zone. This is our stop loss, and so forth. Okay. We're waiting for price to come back and touch here to go up there. There you go. That's what you say. Wait for the retracement or the pullback. All right, perfect. So now the next important thing is how do we risk manage this? How can we use this information to use the entry parameters to count the pips from entry to stop loss? Then we know what lot size to use, etc. All right. So from entry to stop loss is a 30 pip stop loss. So now we know based on our account size what lot size to use, and at the same time we know our take profit. So if we're going to do a 30 pip stop loss, at least at minimum, we want a 30 pip take profit, right? 1 to 1. Okay, a beginner trade. Okay, and you got more experience. You can hold your breath a little bit longer in the water. All right, we can probably go for that 2 to 1 at 60 pip TP, and then you can go for that 3 to 1 at the 90 pip TP based on that setup. So that's you kind of answer your question there, Nico, with patterns, right? It's like you know, they're all interconnected regardless in one way. So like the rally-based rally is technically in structure, smaller candlesticks is just literally a flag. It's all it is. Okay. So that's one thing that I would do. Just know what to do with that pattern when you see it. Do we buy or sell it? And then from there we can decide if we really want to take it up or not. Okay, so perfect. Let's continue on and do a quick analysis here on Goldie. And I do want to kind of recap to see how it moved last week. Okay, I love using the examples here with the big candlesticks. Oh, got you. The extra stuff. Yeah, I don't use it too much, to be honest. But I am familiar with it. Like I can spot it in Eco. Like I can spot it. Like I am. Well, except those morning stars. Dr. Latrice can probably beat me on those. And not in the M's and W's. But yeah. Other than that, I think I spot everything pretty good. But I try not to focus on it too much. um. So let's check this out right here. Look. Okay. So let's start with last week's candle. Okay, so last week's candle and on Monday, not the last week, but the one before this one. And then look, remember the big box represents the week, and then this one here represents the day. So this was on Monday, Tuesday, Wednesday, Thursday, and this was Friday, right? Notice we had a nice control candle here, nice bullish control candle. And then price, kind of peaked up a little bit that it wanted to go higher. But before it did, it wanted to balance out at least 50% of Monday. And then there wasn't enough juice to really take us up, okay, this day. The only way we would have got this trade is we would have positioned ourselves here, right? And then take it back to the top side. Let me do rewind just to kind of make it seem easier. We'll start with that. We'll start with that week right there, just like that. Okay. So again, this is the daily candlestick. Excuse me, no. Yeah, this is the daily candlestick. The daily candlestick from a Monday about 2 weeks ago. All right. So we fib the low to high on just the day, not the don't chase price up. Right. So what we're waiting for is we're waiting for price to come to at least this area. 38, 50%, to take us back up. So on Tuesday, price does come down there, okay, and it touches there. Tuesday you could say, was not the best day to trade because at 8 o'clock in the morning, New York Open, it just gave us this little entry, and then it didn't really reverse either. You see, guys. So during New York, if we were to really dissect this, the move of New York was the sell. Okay, the move of New York was the sell. It had the most amount of pips during that time because it moved down, and then the market closed and literally pulled back about 78% of New York. But the sellers were stronger there. In order for us to really win this trade, right, we would have to just enter there at about at 8, almost 10 o'clock in the morning, right? Enter here and just let the trade overnight, and then maybe at least get us back up to the zero, right? But then there it goes, right? The dad, and there it goes. It finally would have hit take profit 24 hours later. 24 hours later. There's nothing wrong with that, but that's what it did. Alrighty. So this week right here is still a nice control week. Excuse me, this Monday right here is still a bullish scenario. But notice what happened over here. We have a bullish candle that did not make because every candlestick should poke its head above the previous day high or low. Every candlestick should poke its head, or its wick, above the previous day high or low. This one did it. This one did not. Okay. This one is what's known as an inside bar. Okay. These, I'm noticing that these I am noticing that they carry a reversal, or they're accumulating to really support the the control candle. Okay. So obviously we don't want to fib that candle. Okay, we don't want to fib it. So in my opinion, here goes this fib right here, right there. Okay. And again, though, right, because this is the control candlestick, we continue looking for buys, right? Simply because we're above that 23%. Okay. That's the best we have. So I think the next day it actually starts selling. Let's see. Okay, but no, it continued up. There it is. Perfect. It did sell actually, but yeah. But look, came back 23%, and then what did it do? It touched that negative 18, right? That's a good area for take profit. A proper higher high with structure is at the negative 272. We're not really doing structure right now. We're just doing kind of like the areas where one could enter and where one could take profit. But even here, guys, okay, this right here is the control candle on Monday, right? Tuesday was the pullback. Boom. Wednesday, it was not really a what do you call a control candle, but we're at the 23% of the control candle, and we're at 50%, right, of Wednesday. Dr. Aziz, I think she spots a W right here, which also shows a good strength of support and resistance. But you guys see that right here? How all that was connected there? And then price just went back up. This one, okay. Yeah, I'll take a moment here to stop that here. Remember, why is there a gap between, like right here, Nico, in between this area? I think you just separate the day, just to kind of let you know where the day starts and ends. I think that's all it is. This one, Deanna, is an indicator called the where is it at? Market sessions. Oh no, that's not the market sessions. That is the higher time frame boxes. So again, there's a quick tutorial that I'm trying to wrap up. Remember, I'm using templates a lot now. I'm using templates a lot for indicators. Is much better. I think I mentioned before, Nico, the syncing. You'll have an issue with syncing charts. So I in the past, right, I used to have all my indicators on the left-hand side over here. And I can just simply just switch over. If I want to have just see a naked chart, no indicators, I can, no problemo. If I want to go to the my regular settings, I click on that and everything else turns on. Okay. And we're good to go. And even so, right? So I have one called HTF plus the sessions. So basically here I have two higher time frame candle indicators, which is the one you're asking for, Diana. HTF candles, one set to the week and one set to the day. These are the tutorials that I'm trying to wrap up for everybody so we can kind of get on the same page with my charts. And you have access to that. And then in there, once I go down to the 20-minute chart, you'll start seeing the sessions indicator come up. All right. No, it has to be this one specifically. HTF by K Rolo 041 specifically. Okay. All right, but so let's kind of continue this scenario here, right? We have the bullish candle, the pullback, the bullish inside bar came in to 23% and boom. Okay. Push to the top side. If we were just to fib that Wednesday candlestick by itself, right, like that, it literally completed the move, right? Impulse, correction, impulse. 50% entry, take profit at the extension, the end wave, right? Here, we don't buy from here. We kind of wait for price to come back and then take off, okay? Then take off. But that's the pattern that we focus ourselves in. I think this one reversed. See, there it goes. It reversed, completely reversed. And we can follow the same scenario in reverse too. Now this candlestick right here. All right, Carol Keston, appreciate you, man. We'll see you next week. Now we can consider this as a control candle because it engulfed the one to the left, or at least went lower. And then let's see. Impulse. Let's see what this one does. And there it is. Let's see that. See how these movements are happening over and over again, guys? So the moves happen over and over again. The problem is that the market is fractal, and maybe you guys can explain it better than me, but it's expanding, it's contracting, and then expanding on different scales. So we cannot stick to the same time frame every single time. Does that make sense? But the movements are the same. The movements are the same. So if we can kind of like measure the market from that 1 hour time frame and higher, right? We can never really get lost. And then once you have that bigger time frame map, because the patterns repeat themselves over and over again, just in different scales, then we can go to the lower time frame and trade those movements, those same patterns, either per se. I guess you could say I'm personally a New York session trader, right? I am a New York session trader. All right. So I only focus on the small movements. All right, guys, so let's go to the week close. This candlestick formed. This is a big old doji candlestick, simply because, let me go to the 4 hour. On the 2 hour chart, the days are shown. On the 4 hour chart, it doesn't. Okay. And just a quick tip on this indicator, right? It's a very powerful indicator because it gives you the pip count up top. That's how many pips price moved in one direction from low to high. Okay, I moved $103, which is 1,300 pips. Okay, then we'll move back down the same amount, but that number did not change. Okay, that number did not change. So it gives you the pip count. Where's it at? Right here. Okay, the candle box, obviously it's there. The itch. Include body. That's a really nice little feature to have to use. If I include the body, that means that the open and close are present And this entire thing, if we were to draw this candlestick, okay, if we were to draw this candlestick, um, it would be like this, y'all. Okay. I believe that's the open and the close. We had a small little wick right here. It represents that box. And then we had this right there. So it's not a bad little feature to have on. So that's that candlestick right here for Wednesday. Wednesday, what is this? Excuse me. This week right here. This week. Let me go to the weekly chart. And there it is, guys. There it is. Oops, where's my yeah, that quote is really, it really does come. We definitely use that quote a lot by James Clear, just knowing the simple movement so well. It just, and there it is. See, there goes that candlestick right there. Just knowing the simple movement so well is really important. And again, everything, I mean, the candlesticks, they just provide a lot of great information. Alrighty, there it is, right? So, but I don't like this. It's important by visually to my eyes. I don't prefer it, so that's why I turn it off. Okay, helps the body. Yeah, I definitely want to show the midline. All right, so let's move on here to the back to the 2 hour chart. So now, right, Friday is a control candle. Friday is a control candle. You fib that candlestick. And what happened first, guys? What happened first on Monday open? You see how I was telling you all that normally, right, we want price to go to the retracement and then go to the extension, right? But on Monday's candlestick, Monday's open, price first went to the extension and then it went towards the retracement. And if we have the if enough pips to capitalize, right? Well, we can simply trade to the top side. Alrighty. And let's see what happens here. Hit the 23%, wanted to be bullish, and there it is. Day closed. So if we can read the price good enough, we could have potentially bought around here to about 38%. Take profit there, and there it is. Now, here is a scenario that let me keep that staying fit, okay? These candlesticks are really tricky because it's a bullish close, right? It's a bullish open and close. But even though we did complete a low, because we went lower than this, we did complete it, right? We did complete it. The problem is that we did not make a proper higher high than here. So these can be tricky, or at the same time, this candlestick is still in effect, right? It's still in effect. So this is okay, this is Friday's fib. which I would only keep now the 50% just so we can see it. Let me add in there the 61% as well. I do have this. I do have this on purpose, a little bit smaller, just for whenever I do this. All right, perfect. Right there. Boom, boom. Okay. So now we have a bullish candlestick versus a bearish, a bullish Monday versus a bearish Friday. Okay. And just check this out here. If we fib Monday's bullish candle, look at that, guys. How clean this lines up. Look at this. We're at the 50% of the previous day of Monday. Buyers should step in right here, correct? And if they do buy, where will they go to? The extension to there. And simultaneously, that is the 61% of Friday. You guys see that? See how everything's getting connected? So let's see what happens. Actually went to 78%. Institutional buyers zone. Okay. Thank you, Joe. Have a great Sunday, man. Boom. Look at that, guys. And the day ended up closing bullish. I will let this play right out. You guys can visually see what happened. Boom, there it goes. That was Wednesday. Oh, I was about to tell you guys. That was Thursday. Thursday was that news, right? That was it Trump news. I think probably you had sent a message, something about you're looking for a buy somewhere around here. That all happened, I think. Yeah, it was Thursday. I forgot what news it was. But look, it took the high of Friday. You see, that's Friday's high, that red line. And then what we got here? A bullish candle, right? On Wednesday. Right there. Okay. That's already at the extensions. Okay. So when prices coming back, came back and balanced out just shy of 50% of that. Right. And then from there, yep, the pullback exactly, but look exactly at the fib level. And then it took off like that. Now here, Friday's price action almost did the same thing as Thursday, but there was just not a lot of strength to really bring us down. Okay. Not a lot of strength to bring us down. All right, yeah. So hopefully you guys are seeing how price likes to move, right? Likes to move on that daily scale, that daily candle scale, that weekly scale scenarios, right? And again, we can always connect this back to everything. All right, so check this out here, guys. With your Ichimoku, no, with your ETM candles indicator, I kept in there one higher time frame candle indicator. Okay. The one that I set for default is the month. Okay. If you turn it on, it's a good source to have. Really, really good source to have. It won't bother you too much in the lower time frame, but at least they'll let you know where you're at. Okay. So like we're literally at the highs of this month here. So, what happens when you're at those highs? Well, it can get reversed a lot, right? But it's a good feature to have just to always keep in mind that longer trend. Now, remember these big green squares, what scale are they? They're the monthly scale. And the same thing we analyze, guys, is the same thing that's happening. Let me see what yeah, this is January, okay? This is January, February, March, April, May, and the current price section does not have a uh, a box around it. But look, similar movement, right? Similar movement. January did not have an impulse; it just went straight up. February did just pushed it back up. Then it closed around the 50% of its own month. That was perfect for March, and March just carried it on bullish. April, we came back and we balanced out in March, pull back right at 50% of this previous day, and boom. You guys see that? And then it starts struggling a little bit in May. Absolutely. And this is, in my opinion, why the lows and highs of previous weeks, months, and days are really important. You see this impulse right here. You see this little pullback right here. And then you see this higher high, right? A lot of people are saying, oh, we need to correct this imbalance down there. Righty? But sure, it does need to correct that imbalance. But before you even get down there, you have to surpass the 50% of this month. You have to surpass the low of this month, and you have to surpass the high of this month. So all right here is the lot of resistance for right here before we can even get to 50% of that month. You see that? Perfect. So we said January, February, March, April, May, June. Which month would y'all tell me is the control month out of those?
April.
April. There it is. I would easy, right? Perfect. So that is the control month. So what do we do when we fall? There you go, Daniel. What do we do when we find the control month? Well, you fib it. The most recent, right? Fib it. As so. April, May. So May was an inside bar. I told you this is called a Haramani candle, I believe, which I think in Japanese means pregnant. So these two candlesticks represent a pregnant candle. This is the mom, this is the baby inside the mama's belly. That's literally what it means, yo. Okay. Have you guys ever read that book, the Bible book of candles? I remember everybody recommended me that book when I first started to learn how to read that thing. I mean, when I first got introduced to trading, that thing seemed like a candlestick Bible, I believe. That thing, like it was Chinese. I can read it now. I can read it now. But yeah, it's just an interesting though, right? It's like, you know, people can recommend to us books, whatever it is, right? But a lot of times we don't understand them until we're ready for it. And it's a good book to have in your arsenal. I go back to it every once in a while just to see if can go back to it. But yeah. Oh yeah, no, I just skimmed that book at the beginning. Now, Now you can go back to it, understand a little bit better. But again, those are not strategies. They're just kind of like little supplements to help you understand the market, right? Help you understand when looking at higher time frame, yeah. So you basically the lows and the highs, yeah, the lows and the highs. The lows and the highs will let us know, how price is moving. So like we started the session, right? I'm always looking for an impulse or a structured impulse or a single candlestick because this direction or this movement here is communicating to us where price is going to go next. That's our job as traders, right? Is where is price going to go next? And it also allows us to know where the highs and lows, right? To kind of, let us know how, where some good support and resistance can be.
Should we be looking at a particular time frame though? Because sometimes I see you on the weekly, you was on the 1 hour, or now I see you on the 12 hour. Is there a particular time frame we should look at these boxes on?
Okay, good point. So I mainly use two time frames. Okay. This current time frame that you're seeing, right, is the third one, which is this is the monthly scale. So again, the box represents the entire month, regardless of what time frame I'm in. Okay. So let me go back to the other chart that I had for you. Entire time frame sessions. Okay. So if I turn on I have the indicator on the top left, right? If you go to settings, see this one is set for the day. And the day one only comes on the 2 hour and lower time frame. So like for example, if I go let me make it easy. The second indicator that I have is set to the week. The week. So it's just giving me the entire information, a box for the entire week. It doesn't matter what time frame I'm in. If I go to the 4 hour, this same gray box is the same in the 3 hour chart. That's all it is, right? And that same low to high is the same low to high on any time frame. Just the indicator is blocking out a week of information. And when we say a week, we actually mean the actual trading week, Monday through Friday. Okay, Monday through Friday. So the one indicator that I have here on the ETM candles, the one that I set here for you guys, this one I have it set to the month. Okay, so whenever that one's on, whenever you turn this one on, those green boxes represent, the month. So I could be the 2 hour chart right now, and these boxes won't change. I'll prove it to you. If I make a box around, if I draw a box around that box, if I go to the 4 hour time frame, see, that box stays the same. If I go to the 30-minute time frame, that box remains the same. Okay, it remains the same. So this one will not change at all, at all. So if I change time frames using these boxes, it's just to kind of get a better read of structure inside. Here I just have it on, whatever time frame is easier for us to see. But again here, the April candlestick, right? And now we're into the this is the speculation for the week, okay? But I'm using this scale right now because it's really catching my attention. This is the April, the control candlestick. April, May, yeah, May, was an inside bar. May opened at 50%, went back up. It tried to go above 23, went back down all the way to 61% of April, went back above to 23, 23 pushed it back down, 38 pushed it back up, 23 pushed it back down, 38 pushed it back up. So now we're in a very interesting zone, guys. Very, very interesting zone. I am thinking that price is going to go higher, first of all. Okay. We're above the 23%. I think we're going to go all the way up here. Alrighty. I think we're gonna go to that 3,600 mark. Alrighty. This goes back to what I like to say every day. Where is price going? Where are we now? And how do we get in? Okay. So, and yet, that's exactly what I was gonna say, Daniela. I see a pullback back to 23%. Alrighty. And why is that? Well, first, we're taking out the high of the month. Okay. We literally just took the high. We pierced above it. How do we get there? Impulse, correction, impulse. Alrighty. So now waiting for another correction to then, well, it won't, it'll probably be something like, no, it'll probably be something like, well, that's how I think it will move. Alrighty, y'all. Dr. Latrice, that's too much for you, Dr. Latrice. That is $122. You're gonna get out at $2, Dr. Latrice. Hey, ¿te gusta, Paul? Se ve bien, ¿verdad?
Se ve bien, se ve bien.
Yes. I think we get back down to 3,400, 3,400. Ahí está para aguantar para arriba. Yeah, we can get back to 3,400, guys. We could probably leave a little runner up there. I mean, let's see. How many pips is that? Let's say from 3,400, we take it up to 35-ish. That's $192. That's 1,904 pips. 1,000.
Tenemos que hacernos swing traders.
Sí. Sería bueno eso. Para uno por mientras, ¿verdad? Let's see. That is 190, 1,900. 1,900 pips. Let's see. We just let a little runner go. 0.10. What is that going to pay us? 2,000 bucks. 2,000 bucks for that movement. Put that in there at 0.50. That's that 9,500. That's not bad, you know. Nice little vacation money right there. Okay, put a full Lambo lot in there. $20,000, $19,000. Not bad at all. Got a little bit more money in there. $57,000. New garage doors. There you go. That's the But all right, guys. So I like 3,400 to look for some buys. Okay. I like 3,400 to look for some buys. So this is what I would like to see. Probably come back down to about 23% and work his way back to the top side. All right. That's literally what I like to see. Let me put the sessions back in there. Let's see how I look with the sessions. And then look at this. Now we'll analyze it in this matter. So the sessions, this is only the, remember this fib right here, this fib is the entire control month of April, remember? The gray box is the bullish close, I believe. Yeah, bullish close, and then the reddish box is the bear close. Okay, so technically this week it's closed, but I'm gonna put, I don't think he has that feature on anymore. No, he turned it off. Technically, right, there's a bullish box right there. So the previous week, it's low to high. This is technically the previous week right there. Look at that. Where's 50% of this? Midpoint. Background.
Right at the 236.
Is it done? Nice.
Yep. Pretty darn close.
Yeah, it is. And right there by those two rally base rounds.
Mhm.
And there's a beautiful BEC sitting right there.
Middle. Perfect. So yeah, so this the indicator is not giving me the box from the previous week close. It'll make it whenever Monday open or the opens up. But look at that. 50% of the previous candle is right at 23% of the previous week. That's very nice for us. Very, very nice for us. All right. So let's go ahead and extend this out, and we'll just only focus on the blue zone when we go down to that lower time frame. Okay. So let's walk her down. Okay. And let's just kind of go. Let's go to the day. Let's see how it looks daily. And actually, let's go to a naked chart. Okay. On the daily candlestick, we have 3 consecutive bullish pushes. Ms. Letitia, she communicate with me that, hey, gee, a lot of times when I see 3 bullish candlesticks, what happens? It's a pause or a little pullback. So that's a good indication, right? That, price may need a little break after 3 consecutive bullish pushes. It's not always exact, but again, you have 1, 2, 3, little pause, continuation. Okay, let's see here again. 1, 2, 3, a little pause, nice reversal, continuation. Okay, even here, see 1, 2, 3, little pause and reversal. 1, 2, 3, a pause and reversal. So just FYI, guys. Okay, so these 3 days is telling me that, hey, price may need a little break. 3 white soldiers. I think that is what the pattern is called for sure, Dr. Latrice. These are big daily candlesticks. So all right, let's go to 12-hour. Okay, little rally-based rally there. 8-hour. Look at that. Rally-based rally right there. Right above that 23%. That's a nice one. And then actually, let me make this a little more gray. This is a 8-hour ETM zone right there. Okay, and at the 23%, let's go to the 4-hour, a BC right over here as well. 3-hour, 2-hour. See, these zones don't change, guys. No matter what I do, these zones don't change. Okay. And I mean, I literally think that's the best we can go. Anything lower, it's just a little. We can read that better with the momentum, but I would like to start looking for buys around 3,400. Okay, 3,400 to me is the ideal way to go. All right, so one more thing and we wrap it up. Based on these last candlesticks, would you guys agree that this candlestick is the control candlestick on the 8-hour chart? Yeah, that's the one that was engulfing. And okay, so then what do you do then? Well, you fib it. Low to high. So now I'm only worried about the control candle. There it is. The rally-based rally, 8-hour, is in support. The 23% is also in support. Maybe we come back and buy from the 61% of the 8-hour candle. Stop loss at the low of this bullish candle, which is the 1. Closer to institutional, absolutely, Dr. Latrice. And here goes the first extension for the 8-hour. But we said potentially it goes back all the way up there. And there it is, guys. That's what I would love to see. That's what I would love to see happen. $250 stop loss, but $190, excuse me, 250. Yeah, no, it's $25 stop loss, 250 pips. Yeah, so $25 stop loss, 190 pip reward. That could be a good one, man. Really good one if it does work out in that direction. All right, copy link. Gold weekly / monthly speculation. And right on time. Everybody good?
Yeah, G-Money, I got a question. Which one do you prefer to look at, the monthly or the weekly? Or
I normally do on a day-to-day basis, weekly and daily candlesticks when it comes to the sessions, right? But because gold is moving so much, and then there's a lot of stuff going on, in the world, that monthly scale was needed. It was needed. But for the most part, right, it's just about speculating overall momentum. But yeah, the main indicators that I use on a daily basis for the higher time frame candles is the weekly candle and the daily candle. Okay. And as I remember, there's a quick tutorial coming on that pretty soon. I am working on a few things to get us organized, that course. But yeah.
so when you say that, you say the weekly time frame, the HTH boxes is what I'm talking about.
Yes, the HTF box, the setting of it. Let me go back to it real quick. The HTF box, you set the box interval to a week. And then I have two of the same indicators, but then the other one is set to the day.
Okay.
Right? Yeah. And then for example, like when I go to the HTF candle, the visibility of what time frame I want to see this indicator, it's supposed to be this from 4-hour and lower. I don't want to see it anywhere higher, and actually save that. I didn't have it saved that way. Okay, there it is. So here, when I have these three indicators on, the weekly turns on the 4-hour chart. Let me turn off the drawings. See here on the 4-hour chart, I only see how this looks. I only see the weekly one. Okay. When I go to the 3-hour, same thing. But when I go to the 2-hour, my daily one turns on because the daily box interval is set to turn on from the 2-hour and lower. So when I go to the 2-hour, that's when those days are starting to be visible. Right. And it'll remain that way all the way down. It will remain the exact same thing all the way down until I get to the 20. The 20-minute chart, that's where my sessions indicator turns on. And I only have it visible on the 20-minute and 10-minute chart. And there it goes. Now they start turning on right here. Okay, so it's just kind of more of it's a cosmetic way to do things, but it's also valuable because, your chart won't look like, too many things going on, right? Just kind of keep it clean and organized to the best of the ability. Because when you start marking things up, look at that. It starts getting a little messy. Yeah, but more training on this will come. Good questions there. Okay, guys, if there's not anything else, we'll begin to wrap it up right on time, 8:30 a.m. Central Time. We wrapped up. Hopefully everyone has a great morning. Any other questions? We have the WhatsApp, intergroup chat there.
Happy Father's Day.
I appreciate that. Yeah, happy Father's Day, everybody. We'll have the rest of the day, and we will see you guys. Yeah, so Monday is kind of my day off, guys. I do have that Spanish session in the mornings. But for the most part, Mondays I do take off. I see anything I shared in the chat, but if anything, we begin the week strong, Tuesday through Friday. Okay, Tuesday through Friday. Everybody have a good one. Thank you.